Hello, investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. If you've been following along with the Market Guys weekly report, you'll know that I keep my lines on the chart from the previous forecast so that our subscribers can see with their own eyes how accurate technical analysis is, particularly when it comes to candle charts. Now, as I zoom in here, you'll see that this is the Russell 2000 index. And last Friday, when I put out the last recording, which was right here, I drew this diagonal line with my forecast moving higher. And the end of the line basically highlights my target price for the Russell 2000. And you can see here that Monday, we came right up to that target price to the penny. The high on Monday reached my target price. We dropped down, and then we started moving back up towards that level that I highlighted again last week. So what does this mean for next week with regard to forecasting? Well, I'm going to erase all my lines and then again redraw the lines for forecasting the market, and then I'll leave these intact for our review next Friday. So you can track along and again see for yourself the accuracy of technical analysis. Now, you can see here that the high from June 9th is right at this level. So I'm going to draw a horizontal line highlighting that as the resistance point for the Russell 2000. The other thing that we're seeing is yesterday, right here on the 22nd, I'm recording on the 23rd, we see a bullish engulfing pattern and a bounce off of this 20-period moving average, which is that blue line. Today, Friday the 23rd, we have a good strong green candle, which tells me that the buyers are moving in towards the end of the week. So my forecast for next week is going to be higher prices for the Russell 2000, with a test of this resistance area. Note, the end of the line represents my target price, and this highlighted horizontal line represents the resistance area. So I think we're going to move up in a test of that resistance point, with my target being right there, which is basically putting the Russell 2000 at 1429. So that's the more broad-based index in the Russell 2000. Now, if we look at the diamonds, again, I've left my lines in place from last week's report. You see that my forecast was lower prices, mainly because on this day, Friday, when I did a recording, we saw lower volume, a drop in volume, which was more bearish as a signal. So I see that the diagonal line, although my target wasn't reached, the market came down almost parallel to what I forecasted, and the Russell 2000 went higher. It was interesting how the Russell 2000 rallied and the Dow pulled back. Again, not all markets move in sync with one another. You'll see a variety of different moves as the buyers and sellers shift from large cap stocks to small cap stocks and in between. So I'm going to erase all my lines right here for the diamonds and redraw what I think is going to happen. Now, this blue line, again, is the 20-period moving average. I think the Dow is going to move just a little bit lower to test that as a support level and then rally with the rest of the market, as I just explained in the Russell 2000. This area right here, which is the high, is going to be the resistance point. And so that is my forecast for next week, a slight drop early in the week to be followed with a slight rally to test resistance. One other thing I'd like to point out, and this has to do with analyzing volume, is you see here for the past 5 days this week, we did trend lower, but Friday the 23rd was on much lower volume. So what that tells us is that the sellers are running out of that steam. They're running out of momentum. And that is the first signal that the buyers look for, is a weakening in the sell trend or the short-term downward leg. And that's their signal to buy. And this 20-period moving average will most likely act as a support level. So I'm going to draw that horizontal line right there noting support. So we have support, resistance, slight pullback to support before a test of resistance, and that's next week forecast for the diamonds. Now, if I go to the spiders, which is the S&P 500 ETF, you can see here that I left my lines from the past 2 weeks, again, so you can see the significance of what we're talking about. The week before last, I projected that the market would pull back. It did. It reached my target right there, which was the low from last Friday. And then Friday, the report went out again on that day, and I drew my forecast that the S&P would rally, with the end of that line being my target. So my target price was actually hit on Monday right there. And so that is, again, another 100% accuracy forecast for the S&P. So I'm going to erase all lines, and then I'm going to draw my new forecast lines so you can track them next week. I think that for the S&P, this high resistance point will most likely hold. And we have here what's called a spinning top, which is a slight green candle. It's a very small bodied candle. It looks like a child's toy. Again, a spinning top. And those are usually found at pivot points. So we see that spinning top, colored green, on higher volume, which tells us that the buyers are starting to move in. So my forecast for the S&P is going to be, again, a higher move to test resistance, and we'll hold those lines in place for next week to analyze. Now, finally, for the general markets, I'm going to look at the Qs, also known as the power shares. This is the ETF for the Nasdaq market. And you can see here my target price was reached early on in the week. But today, the 23rd, the low, we're right within pennies of that target price once again. And interestingly enough, we see a bullish engulfing pattern here for the Qs. So erasing all lines, I'm going to redraw them for next week so you can, again, I know it sounds a little repetitious, but I want you to get an idea of how accurate technical analysis is as a forecasting tool. And the only way to do that each and every week is to prove it to you with leaving the lines up and in place on the chart. So this support level will most likely hold. The bullish engulfing pattern allowed us to also close above that 20-period moving average. So my forecast for next week on the Qs is going to be a high of the resistance point right here. So we're going to rally up. Again, that's my opinion in the forecast. And so that resistance line will most likely be tested in a positive week for the Nasdaq. So right across the board, the Russell 2000, the diamonds, the Qs, and the spiders, the S&P 500, all look bullish for next week. And keep in mind, I'm not telling you sell the house, sell the kids, sell the dog, buy the market, and get long. I'm just saying that we're taking a cautiously long position for the short term to test that resistance. And we have to always be mindful of the possibility of a pullback. So when you're trading or investing, it's a good idea to put a good risk management plan in place. I would suggest the 1% rule. I'm going to give you some ideas on how to find and learn about that. But the 1% rule helps us minimize the risk when the market starts going against us. Now, finally, I'm going to look at the volatility index, also known as the VIX. I said that we would pull back on the VIX. This was the forecast for last week. And so we did just that. The forecast went out on Monday right here. I said we would pull back. And I even went so far as to predict the following week, which being put out last week means the next week here in present time. So we pulled back exactly like I said it would, 100% accurate. And so I'm going to leave this line in place as I believe the VIX will start to rally off of support here. So we have to really keep in mind, because the VIX is a contrarian indicator. However, there are times where the VIX will go up with the general market. It's not common for that to happen, but I do think the VIX will rally, even though the market will rally, because as soon as we test that resistance point next week on all markets, I think we're going to start to pull back. And that's when the VIX starts to really get heated up. And so we're going to keep that line in place for analysis next Friday. So if you'd like to learn more about what I've just mentioned with regard to support, resistance, and even the 1% rule, I would suggest you go to the Market Guys website right there, www.themarketguys.com, and then click on the video tab right there at the top of the page. That will bring you to a library of videos that we call market shots. And you can scroll down and you'll find, third one down on the left is the 1% rule. Make sure you review that. It's a simple math formula that could help keep your account protected through, again, a good solid risk management plan that basically only allows us to lose 1% on any given trade. So if I was to put that in a sentence, I would basically say, I, state your name, will not allow the market to take more than 1% of my account on any given trade. And if you could stick to that discipline, you'll see that it will allow you to be wrong more times. And I know that sounds crazy, but we have to allow ourselves at least some room for error. And if you are wrong, you're only going to lose a very small amount, which helps preserve your buying power and leave you with cash to invest on another day, especially on the down days when things start to turn and look like they're going higher. So that's it from the Market Guys. I want to thank you once again for joining us each and every week for this market report. Please feel free to share it with your friends and family and stay connected with the Market Guys. Until then, have a great trading week, and we'll talk to you next week. So long.
For almost 3 decades, A.J. Monty has motivated audiences worldwide about creating personal wealth and winning in business. His time-tested risk management strategies focus on ideas that involve a keep-it-super-simple approach, also known as the KISS principle. These concepts have been delivered to people in over 16 countries around the world, reaching audiences in the millions. AJ is a best-selling author of 2 books, The Market Guy's 5 Points for Trading Success and Take Charge of Your Money Now, both of which have been featured on PBS Television, Fox Business News, ABC TV, as well as Sirius Money Radio. As a financial educator and consultant, he has worked with some of the most recognized names in the financial industry. Companies like Bank of America, Charles Schwab, E-Trade Financial, Scotiabank, and TD Ameritrade's Thinkorswim. If you have ever been challenged with having to make a tough decision regarding when to buy or sell a stock, then help is on the way. The Options Oracle and Equity Oracle Alert services are designed to help you make those tough decisions. AJ will not only help you find the best trade candidates, but he will also lay out the exit strategy for each position in an easy-to-understand format that anyone can follow.
Hi, my name is A.J. Monty, Chief Market Strategist for the Market Guys. For almost 30 years, I've traded stocks, options, futures, and even currencies. I've traveled the world teaching people just like you how to profit in the market using time-tested strategies that focus on risk management. You see, the secret to making money in the market depends on your ability to limit losses when you're wrong. In other words, if you want to make a lot of money in the market, don't lose a lot of money in the market. Now that may sound funny, but it's true. Most investors are challenged with 2 questions. The first question is, how do you find a good stock? Well, the best way to find the right stock starts with eliminating all of the stocks you would not invest in. This process of elimination is called stock screening. And our services help you overcome the odds so you're putting your money where the money is going. We're simply following the trends. The second question most people ask of me is, when is it time to sell? Well, if you don't have an answer to this question, then you might find yourself in a position where you're holding on to your stocks when things go against you. This is the worst thing you could possibly do because I believe this is no longer a buy and hold market. It has evolved into a buy and protect market. Holding on and hoping for things to get better is not a strategy. In fact, doing this will eventually lead you to a catastrophic loss, and you wouldn't want that. Our trade alert services help answer these 2 questions. Not only will I help you find the right trade candidate, but I'll also show you how to use the charts to manage risk. I don't use the charts to predict the future. I use them to protect the future. The charts tell me when it's time to get out as well as when it's time to get in. And that's what I'd like to teach you as well. We have 2 services, the Equity Oracle and the Options Oracle. The Equity Oracle is an alert service for traders who would like to trade only equities, whereas the Options Oracle is our premier alert service for both equity and option traders. Each alert is laid out in an easy-to-understand format that shows charts depicting entry and exit points. Risk management is our cornerstone of each service, so you don't have to struggle with the decision of when to get out, or when a trade goes against you, when should I take my loss? The strategy is to use the KISS principle, keeping it super simple. As a bonus, you'll have access to a live Q&A session as well, each and every month. This is where you can submit a stock symbol, and I will analyze these stocks while we discuss the best trading strategies for each position. And it gets better. In addition to the alert service and the live monthly Q&A sessions, we're also developing a member page that will include instructional videos about how to get the most out of our service. Without question, this is the best trade alert service available on the market, and we look forward to having you as our newest subscriber. Simply click on the link below to subscribe. It's easy. Once again, I'm AJ Monty, Chief Market Strategist for the Market Guys. Thanks for watching.
Enrolling in this service is easy. Simply click on the link below to subscribe, and your weekly alert will be delivered right to your email box. And if you act now, we will include AJ's best-selling book, The Market Guy's 5 Points for Trading Success. This is a first-time offer that will get you on the road to success and keep you there. Remember, if you continue to do what you've always done, things will never change. Positive results will only come after you have taken the first step in the right direction. We look forward to having you as our newest member.